Stock trading versus stock investing. This is a question that's actually come up a lot with some of my students, with some of the community members. And I was recently getting a private lesson from somebody, camera lighting, all kinds of stuff like that. And, they're like, oh, what do you do? And their first question was like, hey, I don't want to trade, I want to invest. What kind of stocks would you recommend? And, I felt like for a long time, this is something that we want to bring as, kind of like an investing service, so to say, and trade ideas and recommendations and things like that, and also tools and strategies to invest long term. I am of the belief that you should trade whichever one of those fits better for you. For some people, that is trading. For some people, that's stock investing. And you have to decide which is you. And some of that you can do based upon your personality, but then some of it you can do through experience. I'm going to make the case for both. I'm going to talk about the differences and where the advantages lie on each side and where the disadvantages lie, so that you kind of have a good understanding of the landscape of the difference between stock trading and stock investing. And I think it's important that you look at both equally and then, give each a shot. And, and I'll give my recommendations on how to do that and which I think you should, which of the two I think you should do. So with that being said, let's get into the last of the summer school. This is the last of the summer school lessons. This will be class number 4. After that, I'll be gone for a weekend and I'm going to like a spa retreat. And then end of the month, we have just a video coming out. So for those of you who don't know me, I've been doing this for two decades, worked on Wall Street as a broker, traded for a hedge fund, verified profitable trader, shared our 2020 performance and our Q1. Q2 is coming out in a couple weeks. We should have it out in a couple weeks. So we got a few things in the pipeline, but then we do that and we'll have it out. So we'll show how we've been doing and we'll just continue showing each quarter that we are profitable traders. So with that being said, trading versus investing. It's important to understand the difference. Trading, by definition, is used to employ a fast money technique to multiply your money in a very fast way. And investing is designed to multiply your money in a slow way. So you got to look at them as fast money and slow money. Now, with that being said, I'm sure the first thought that's probably popping into your mind is, why would I choose slow money over fast money? And that is a very valid question. And when we're done with this session, I think you're going to realize that, and Giuliano Faria just subscribed. Welcome aboard. Good to have you, Giuliano. So I think you're going to realize that when we present both, you're going to see the value of each, and that maybe you shouldn't just be doing one. Maybe you should be doing both, or maybe you should be doing the one that you're not doing now and stop doing the one that you're currently doing. There's reasons for both. But I know in today's culture, everybody wants results fast. Like if you had a choice, this question often comes out like, hey, if you could get, $30 million at the end of the year, or you could get like X% return for 30 years, which would you choose? And almost everybody chooses the higher number and the reward that they're going to get faster. And they fail to do the math, and they fail to realize that if they had taken the other return, they would have making 3, 4, 500% more money over time. And that's because we tend to look towards the fast now rewards versus the rewards that may give us a bigger return but take a longer time. That is just how we are wired as human beings. And so it's important that you don't just think, oh, fast is better. Not necessarily. Not necessarily. There are times where slow money will completely outperform fast money. And we'll talk about how and why. So with that being said, the difference is fast money versus slow money. Trading is an application of an edge. You find an edge and you multiply that edge. And the more you multiply that edge, the more your money multiplies. And that sounds like it's a straightforward linear path to a faster account balance. And in some cases that can be, but in a lot of cases it won't, because you're going to experience losing periods. You're going to have losing quarters, losing days, losing weeks. You may even have losing years. That's a possibility. And so people forget that, oh, it's faster money, and they just think, oh, I'll just take that. But you got to remember, a good trader a good trader is probably around 60% accurate, a good profitable trader. An excellent trader is probably around 70%. And even then, just because they're 70% accurate, that doesn't mean they're necessarily winning high plus R per trade. They may be winning 1,200 on their wins and losing 1,000 or a little bit over 1,000 on their losses. And that may seem better to be 70% accurate than 60% accurate. My accuracy clocks in around 60%, and I average about 3R per trade, statistically over thousands of trades. We shared this in our 2020 performance. We're like 61, 62, 63% accuracy, and we're averaging about 3R per trade. Even this year, when our accuracy has dipped a few percentage, we're still averaging around the same. So someone who's doing 60% accurate and is making 3,000 for every 1,000 they lose, they're going to make more money. But again, not everybody can do 60% accuracy and 3R per trade. And you're going to have losing periods. You're going to have 40% losses at 60% accuracy. And those 40% losses can pile up over periods of time. I know tons of bank traders and professional traders that go through not only losing months, but losing quarters where they just can't make money that quarter. And so you have to understand that maybe it's fast money. It's fast money when you're winning. It's also fast losing when you are losing. And that's the thing that people miss. And that's super important that you understand the difference. So when you're trading, you are applying an edge and you're trying to multiply that edge and execute it more and more times. But that more you execute it, it amplifies your wins, but also amplifies your losses. Whereas stock investing is a little bit different. This is value building and compounding over time. I have a friend who is he's been building a company since 2014. And if he was able to trade the value of his company isn't public yet, but if he was able to trade the value of his company, he would have, quite a volatile equity curve. It would be up, but it'd be quite a volatile equity curve. However, he's not able to trade his own company, but the value of his company over time, over the last 7 years, has grown exponentially. And maybe, you look at the starting point of where it was when he started off and the valuation of it now, from a $200,000 company to a $30 million company. If he had traded that, he might not end up with a $30 million valuation at the end of it. But because he's invested and built value over time, his company is now worth $30 million. And that return would have outperformed the trading version of him at 60% accuracy. And so it's important to understand that difference. That's what stock investing is like. You buy something, you hold it for a long period of time, and it allows to build value. And as the stock builds in value, your gains start to compound. That means there's a multiplicative effect of it. So instead of trading and winning $3,000 for trading, losing $1,000 on a trade, now his company, as it gains in value, is increasing exponentially, and that builds upon itself. And that's different. That's kind of what it's like when you are investing in stocks versus trading. The $200,000 valuation to $30 million valuation in 7 years, it's very rare that a trader is going to take $200K and turn it into $30 million in 7 years. That's a very rare event. Maybe of all the profitable traders, maybe 1%, maybe even less. That's a very, very rare event. And so if you think about that, if it's a rare event for profitable traders to take $200K and turn it into $30 million, and yet over a 7-year period, and yet by building value and letting that value compound over time in his company to take a $200,000 company and turn it into a $30 million company, there's a difference there. Maybe there's something to consider. So it's important that you understand the differences. The other major difference between stock trading versus stock investing is that stock trading requires a lot more timing. Anytime you make more decisions, you have more times that you have to be right because you're making hundreds or thousands of decisions over years and years and years and years. Whereas investing, you tend to only make one decision every so many years on that particular stock. And if you're right, you've built something that gains a massive amount of value. And if you're wrong, you're just losing a fixed amount, and that's it. And that's it. The disadvantage of stock investing is that if you invest something and hold it for years and it doesn't produce a positive return, then the capital you invested in that stock has not produced any return. It's been wasted. Wasted in the sense that it didn't produce a return. It's possible you may not have produced a return in stock trading that particular stock as well, regardless of its price fluctuations, but it's important to understand the difference. When you trade, you have to have more instances where your timing is right. And the more you make decisions, the more chances there are for you to be wrong. Whereas when you're investing, you're only making so many decisions per year. You have less instances to be right or wrong, and you have less timing. Timing isn't quite as sensitive. In trading stocks, timing's sensitive. When you're investing, timing, while it can help you, it's not necessarily the defining factor which is going to create massive capital appreciation in your stock portfolio. So it's important that you understand that difference. So that's the difference, timing versus value building. Trading requires timing, investing requires building value over time and letting that compound. Okay, so any questions on this before we move forward? Let's see here. Sasha's responding to Alex's question. Yeah, Alex, we're going to get to you today on that. We've done our analysis and everything like that. I'll be posting that later today around midday for sure. Thank you for your patience. I appreciate that. Justin's still making comments about the England. Yeah, they sat back and played defense. Yeah, they did do that for sure. Okay, I'm not really seeing any questions, so let's go ahead and move on to the next part. So Victor's saying no cues here. Copy that. Okay, so let's take a case study of Amazon and let's look at the IPO. And so I'm going to have to pull up some charts from this. And BSN Murti just subscribed. Welcome aboard, Mr. Murti. Okay, so let's take a look at Amazon. Let's go to the weekly chart. Amazon's been around since late 90s. You all probably know this. And you look at it today, 3,700, and where it started way back in the 90s. And I want to kind of show you something here. So the stock opened in the late 90s, 97, roughly $2. In the first few years, it peaked at 112. Now, let's take a medium-term swing trader, a long-term swing trader versus a value investor, and then we're going to look at the difference in returns over time. So let's say you bought at the open, let's say you bought at $2, and you absolutely top tick the best price over the first few years. So you opened at $2 and you got out at $113. So if we do the math, let's say you started with $500. You invested $500 in Amazon at the start. Okay. You got out at $113 and you got in at $2. So 113 divided by 2. You got a 5,600% return. 5,650% return. It's not bad on your $5. So you multiply on your $500. So if you multiply that, at the end of this few years, you walked with 28,200. Now this is like a medium-term swing trader, maybe a short-term position trader. Short-term position trader is usually someone who holds for a couple years. You made $28,000 from your 500. That's not bad. That's a darn good return. Now, I'd like you to think about, in terms of your own personal trading experience, have you in your own personal trading experience turned $500 into $28,000 in less than 2 years? Probably not. Very unlikely. If in those 2 years you had turned it into 1,500 or a few thousand or 5,000, that would be solid. You would have done a really good job. But probably none of you who are watching this video had turned $500 into $28,000 in a couple years. And if you did, you probably threw risk out the window. Like risk was, you just totally abandoned any sort of risk controls or anything like that. So if you think about a stock investor who held this for a couple years, they only had to make one trade. They only had to worry really about $2 worth of risk. They bought it at $2. So your $500, at its lowest point would have gone down to maybe like $300 roughly. So they risked $200, max risk of $500, and walked away with $28,000. That's pretty darn impressive. if you had traded that, if you had just traded Amazon stock, I think it's a very low probability event that your $500 would have been $28,000 at the end of this. And yet, this is the difference between a stock trader versus investor. But if we start to expand the timeline a little bit, let's say you were lucky enough to buy at the very beginning and you had held through today. Your $500, you had held through today, $3,700. Let's say the price is $3,700. So $3,700 divided by your original $2 share price, you've increased your portfolio by 185,000. Is that 185,000? Let's do the math. 1850. You multiplied it 1,850 times versus 56 times for the earlier trader. Times your $500 investment. Your same investment is almost $1 million right now. One trade. Your $500 is almost $1 million. Now, how many of you have been able to take $500 over 2 decades and turn that into $1 million? Probably nobody. For every 10,000 people that watch this, maybe one person will do that, which means that you should bet on you not being that person. This shows how value compounds over time. This is also not including if Amazon had ever produced dividends or any of these other things or splits or anything like that. So it's important to understand that while trading is quote unquote fast money, sometimes the fast money does not beat the slow money. And I'm willing to bet for every trader that has been trading Amazon since day one, they were not able to increase their overall profit on their Amazon trades by 1,850 times, which is what, like almost a 20,000% return or 200,000% return roughly. I'm pretty sure out of the millions of traders that have been trading that long, I didn't start till 2000, 2001, that very few, next to no traders, have produced a 200,000% return. So when people hear fast money in trading, they think that that is superior. And in some cases, it is. And in some cases, it's not. And that's an important difference that you have to understand. Let's go to comments and questions. B to UB, Fud City. Afternoon, Chris. Afternoon to you as well. Earn Money Home Worldwide. Thanks for the live. You are welcome, Earn Money. So, does anybody have any questions on kind of the main differences and how stock investing could be something that maybe you want to explore, that you want to employ, that you want to use in terms of your building income and wealth? Does anybody have any questions on that before we move on? I do have one more slide that I'd like to show. And then we can kind of take an open Q&A. So let's... Okay. Any questions on that before we move on? Doesn't look like it. Okay. Do I have any tea left? I'm out. Last sip. Okay. So the real question then becomes, should you do one or the other, or should you do both? I have two answers to this, which is, first off, you should do the first answer is you should do the one that naturally fits to your personality and mindset best. If you're someone who is pretty good at making decisions with a fair amount of probability and enough profit that you can have a profitable edge, then you should trade. The question is then, should you invest at the same time? If you're someone who doesn't do good at making a whole lot of decisions, but you're pretty good at spotting long-term companies and winners, well then, maybe you should be investing. Maybe you should be buying and holding for a long period of time. I don't employ the strategy of just buy and hold and walk away. That's not what Wall Street does. It's not what Warren Buffett does. That's not what professional traders do. That's a lazy man's approach that's been promoted by all these YouTubers. Like all these YouTubers who were real estate agents are now all of a sudden stock traders, and they're like, yeah, buy and hold, don't do anything. Yeah, it's not what Warren Buffett does. When Warren Buffett sold his entire Delta stake at the beginning of COVID, he wasn't just buying, holding, and walking away. He was doing very careful analysis, analyzing risk, looking at future trends, and then making a decision. So I don't pretend to say that buy and hold and just walk away is the best strategy. It's not. If it was, Warren Buffett would have been doing that over the last 80 years or 70 years, and he hasn't. When I recommend investing, you have to do risk-adjusted basis. You have to also add in options components, which I highly recommend. Super, super important. But it is something that I do recommend if you are not good at making trading decisions and a lot of trading decisions, but you can see companies that will do well or are likely to do well early on over time. So that is someone who I'd recommend doing stock investing. Should you do both? My answer is, if you can, yes. Why? Because then you get the advantages, the best of both worlds. You're someone who can pick out short-term trends, maybe day trading, maybe swing trading. You're someone who can spot these general swings. You're good at kind of getting an idea of when certain sectors and industries will do well or underperform. You should be doing trading. And if you're good at spotting companies that have potential for long-term growth, you should be doing that as well. You should be investing as well. The advantage of doing both is you can take advantage of these short-term trends and be right 60% of the time with a positive expectancy. You should do that. That's your fast money. That allows you to build capital appreciation fast. You're going to have losing periods, but that allows you to do that. The long-term stock investing allows you to build value and multiply that over time. It also allows you to AMM, always be making money. Because maybe there's a time period where you're in no trades or you have no new trades, and those trades aren't making any money, but your stocks that are value investing are compounding over time and ideally getting dividends. So it's super important that you can take advantage of both if you can. And you generally don't need as much capital to invest over time as you do need to trade. Because when you trade, you're usually trading on margin. You want to be trading a lot of things at the same time, in and out, maybe doing options with it. You're going to probably need a fair amount of capital. Whereas if you invest, you generally don't need as much capital, don't need to be trading on margin, don't have to, and you're probably not putting as much at risk. And you can allow that to build over time. So super, super important. B2B had a question that looks like he retracted it. He was saying that Amazon is a rare case. I wouldn't call Amazon a rare case. I could find you dozens and dozens and dozens and dozens of companies that have produced similar like returns. I mean, look where Google is today. You know, Google's and it opened. I was there the day that Google IPO'd, roughly around $80, if I remember correctly. So it has split since then. So why is this not going back that far? Oh, yeah. Yeah, it was a different symbol back then. So anyways, we'll get into it. But Google IPO'd in the early 2000s. I think it was 03 for roughly $80. It's in the thousands today. You can look at Microsoft. It's not in the thousands, but it's in the hundreds. Spotify, Shopify. All of these are stocks that IPO'd at low prices and have increased tremendously over time. Let's take Shopify, who is totally killing it. This is a stock that IPO'd a few years ago for $20 and now it's at $1,500. You look at Spotify. Okay, it's doubled in value. Yeah, doubled in value. But there are hundreds and hundreds of stocks that have doubled, triple, quadrupled 10x, 20x, 30x, 50x, 100x over time. Many of them with splits, many of them with dividends. So, if I was to take like Microsoft or anything like that, how many of you in the last 2 years have doubled your money? I have some traders, some of my students that have, but it's not a whole lot. It's not a whole lot. And yet there are a lot of people that have doubled their money by investing in Spotify or in Microsoft or all kinds of things in the last couple of years. And so a lot of people think that trading is superior. And then there's the other camp that thinks investing is superior. And I think both are superior in their own way, at their own times, in the right environments. And that if you can, you should be employing both. They do take slightly different set of skills. They do take different mindsets. But if you're someone who has the ability, the flexible mindset to both day trade, swing trade, and hold things for years, you should be absolutely taking advantage of that. I do that. I day trade. I swing trade. And I often have these portfolio trades that I share with my members. Some of them I share, some of them I don't, because I'm only sharing my trades for so many hours a day. I have many portfolio trades that I don't share because I'm taking them off hours. And I have these trades that I hold for long periods of time. My biggest winner in terms of dollars last year was DraftKings. How long did I hold my DraftKings trade? It was my longest holding trade of the year. It was like 8 months. April till December. Closed it out mid-late December. So roughly 8 months. That was my biggest winning trade in terms of dollar. It wasn't my biggest winning trade in terms of plus our gain. That was a day trade where I had like a 50-cent stop loss and I gained like $13 return on that. So like a 26R. And yet, even though that was a 26R return, it still didn't make as much money as my DraftKings trade. My DraftKings was responsible for like a huge portion of my gains last year. Like 30+%. 30% of my gains last year. And I don't mean 30% like, I mean like 30% of my overall gains. So I think we did 72% last year. So 30% of that would have been like a total net 21% return. So that was my biggest winner, was the trade that I held the longest. Now, would I have had some stellar returns if I had only held positions for 7-8 months last year? No, I wouldn't have performed as well as I did because I had certain trades that I held for long periods of time that didn't plan out. Same with this year. The day trading became another income. And so the day trading and the swing trading, the trading plus the investing is what allowed me to do a 72% return last year. It wasn't just one or the other. And so it's super important that you see the difference, that you look at the differences, that you, if you can, employ the differences. That is something that I highly recommend. And if you don't have the time, if you really don't have the time during the week to make a whole lot of trading decisions, you got a busy life, you have wife, kids, you have busy family, work and everything like that, and you only have a couple hours per week to really trade. Like if you only have like 1 or 2 hours a week to trade, I would probably recommend you do more investing, or at least if you are going to trade, do longer term swing trades or medium term swing trades. That's what I'd recommend. Maybe you don't even really have time during the week. Maybe you really only have time on the weekends. You're just too stocked Monday through Friday to really do any trading. You should probably be doing investing and long-term trading, holding positions 6 months, a year, multiple years. I would definitely recommend that. If you're someone who has more time, I'd recommend doing both. I have time because it's my profession. This is what I do. I pay myself by the time that I sit in front of the computer and make decisions in and out of the market. And not just day trades, but also trades I hold for long periods of time. And so if you can, I'd recommend it. If you can't, then align with the one that's best for you. But at least try both, because you really won't know until you go through the process and have the direct experience of what it is to trade or what it is to invest in stocks. You won't have that experience until you do that. And I recommend it. I recommend doing a little experiment. Let's say you have a small account, a couple $1,000 or $1,000 or whatever, I recommend taking half for trading for the next year, from today forward to the next year. Take the other half for investing and trade the other one using your edge, your strategy. Apply it in any way, day trading, swing trading, whatever you want. Take the other one, pick a few stocks. Just pick a few stocks, maybe 5 or 10 stocks that you feel like you can hold for a year and at the end of the year will be more profitable and in a really good position by the end of the year. And at the end of the year, see which one does better. If they're both profitable at the end of the year, you should continue doing both. If only one's profitable, you should probably shift to the one that's profitable. And you can give the other one a second chance, maybe another year or two or something like that. But if after a few years you can't make it work, shift to the one that is making money. That would be my recommendation. So that is the essence of today's class and today's summer school on trading versus investing. And so with that being said, any questions or comments at this point? Jeevis Chiang says, like it, mentor. Appreciate it. I'm glad you do. Questions or comments at this point? What happens if I do click that? Okay, it doesn't do anything. That's good to know. That's good to know. B2B says, thanks for the feedback, Chris. You're welcome. It's a valid question. It's a great question. I appreciate you asking the question. Sure, it's easy to cherry pick, but you got to remember there's like 30,000 stocks in the US. There are lots of stocks that have appreciated massively over time. You know, other than Amazon, there are lots of stocks. You know, you look at like, let's take DocuSign, something that I have a position in. Full disclosure, I have a position in DocuSign. I have a long position in DocuSign. Where did DocuSign start off? Went public 2 years ago. Started at $38. It is, well, let's just round it up to 40. What is that? 290 divided by 40. It's up 725%. How many of you in the last 2 years are up 725% on your money? Trading. Probably not many. And yet, if you had just invested $500 in that back in the day, that would be a lot right now. What did we say it was? 40 divided by... Wait a minute, wrong way. Times your 500. Yeah, your 500 is 3,600 right now. Just one trade. That's just one trade. And that's assuming that you just traded the stock. What if you had traded options on top of this? You could have added a whole nother income to it. It could be 4,000, 5,000. So it's important to not dismiss stock investing because it's slow money. It's important that you look at the differences. I'm willing to bet there are many stocks that y'all could pick today that in 1, 2, or 3 years will have 2x, 3x, 4x, 5x your money. And what would that do for your account? What would that do for your experience? What would that do for your investing, your finances? If the money you put in those stocks in a couple years had 2x, 3x, 4x, or 5x, how much would that help you? You may be making money trading, but you may not be 3x, 4x, 5x returns on that. And yet to have this investing portfolio on the side that is doing that, what would that do for you? What would that do for you if you had just put a simple 500 and is now 3,600? What if you had had multiple stocks that you were able to do that? What if you had multiple stocks that you were able to 2x? How would that really help you today? Super important that you really ask that question. B2B has a question. Randomly want to ask you if you're holding Ethereum long term. I am, yes. Yes. Yes, I do have long-term positions in crypto, for sure. I'm still not totally convinced that crypto is going to be a long-term viable investment. I think Ethereum has a better chance than Bitcoin because of the downstream applications that Ethereum offers versus Bitcoin. But from my experience in investing in things long-term, that have really built up value and generated a lot of value. There are things that have done so as bubbles, and there are things that have done so because they were great technologies or whatever. I think crypto is a pretty amazing technology. My one concern about crypto is this, and this is something that is, I think, a big obstacle to crypto making its way into the financial markets in such a deep, pervasive, long-term basis. Because it's only been, Bitcoin's been around for about a decade, roughly. It's not something that has penetrated into all aspects of the markets like, say, Visa has, or PayPal, or something like that. So when I look at the major obstacle to crypto, besides regulation, which I think is a small obstacle compared to this obstacle, it has to do with the technological adoption. There are going to be, for the foreseeable future and decades to come, people who simply just aren't that tech savvy. If something is complex to use and hard to use, to where it takes a certain level of understanding to use it, and a lot of people won't cross that barrier, then it's hard for something to get worldwide adoption. Everybody knows how to put on a pair of shoes. Everybody knows pretty much, or will learn how to drive a car, ride a bike. These are things that have potential worldwide adoption. Everybody knows how to, or will learn how to, buy an airline ticket. So there's no barriers to adoption to those technologies. They're easy to understand, and they're easy to use. Amazon, great example, super easy to use. Crypto has got certain complexities to it. You got this wallet, which isn't like my wallet, like there's no crypto in this wallet here. It's like I can just pull out my card, swipe it, done. I can very easily see, like I don't need like, the passcodes or the transaction things or check the blockchain or anything. Like there's a lot of things about crypto that certain people just aren't going to adopt. And, this is not just my generation, the older generations. Older generations are less likely to do it, and they're going to be around for a few decades. I am hopefully going to be around for 4 or 5 decades. But even there are certain young people today that just tech savvy is not their specialty. And they have a better chance of using Amazon versus using crypto or understanding even how to use crypto. So that is my one concern with crypto, is that it is not an easy technology to adopt or grok or understand. Could that change over time? For sure. But you would have to make it part of the everyday educational system. It would have to be something that people are learning about at a young age and really take the time to get to understand it and apply it very easily and quickly. Someone can use Amazon and buy something on Amazon way quicker than they could really use, crypto, especially if they're just starting out. It's a much steeper learning curve on crypto versus Amazon. So that is my one major concern about crypto, is the complexity of the technology, the understanding of it, and the adoption of it. That will be a hurdle over time. Assuming people can get over that, I think crypto has a long-term viable future. But it still has to get over that global, adoption, understanding hurdle. And until it does that, it will have its challenges. I know very few people in their 70s or 80s that know how to use crypto, could retrieve their money out of their wallet and things like that. Coinbase and, these brokerages are making it easier, but, that's a tricky one. So yes, I'm a long-term believer in crypto. I have 8 or 7 different cryptos in my portfolio, and those are all long-term. Those are not short-term. I have done some day trading in Ethereum. I like Ethereum better than Bitcoin for day trading, but crypto hasn't moved a whole lot lately. So especially Bitcoin, it's been kind of stuck, in the low 30s lately. So I think a big move is probably coming in the near future. So yeah, good question. He said, I agree, Chris. I'm betting the big tech companies, PayPal, Square, may help with the transition a little bit easier. For sure. Yeah, for sure. I think there's definitely ways that it can help. But if the technology is still complicated, it's, and it's hard for people to grok, it's going to create some obstacles. Amazon is not hard for people to grok. Amazon is way easier to grok than crypto. So yeah, even if you have PayPal and all these others helping it. But yeah, there's a difference there, but I agree with you. There's definitely things that can be done to help improve the adoption and understanding of crypto. For sure. For sure. Any last questions? By the way, it's another example of a company that's just, multiplied their money many times. 13 to 370. Lululemon, very good company. I have a pending order to get long on this one here. Yeah, how many of you in the last 13 years have increased your trading account by 28 times? Probably very few. Probably very few. And yet, just a few $100s in this, held for enough time, you've increased it 25 times. Again, don't ever diss stock investing. It has its value. It has its place. There's certain environments where it won't work well, and certain environments to trading will be superior. You have to understand that both have their place, and the best thing you can do is learn to apply both. So yes. Okay, any last questions before we wrap it up? And if you haven't already, hit the like button. We appreciate it for giving you some different ideas and comparing and helping you understand the differences between trading and investing and just the mathematics of how they work out. A lot of people don't look at it. A lot of people have dissed stock investing, and I think it's for the wrong reasons. Trading tends to get glorified. Investing is a little bit more boring. When you hear about investors, that make a ton of money, it's like, oh, they made a decision several years ago. They had to sit through all these drawdowns and things like that, but now they have like millions of dollars. And it's easy, to present that, but a lot of people are like, look, I can't, hold the money for that long or something like that. Whereas traders, you hear all these flashy traders and scalpers, and, I traded 100 times today and, I made $5,000. And some people are thinking, wow, I'd love to make $5,000 in one day. And, yeah, that's true. And, your $500 could be making you $5,000 today just by one day's appreciation as it compounds over time. And you don't have to make tons and tons of decisions, 100 decisions a day to do that. You just let your stock continue to multiply. So it's important. Trading tends to look a little sexier. Investing doesn't, but they both can produce superior returns. You need to understand the difference. So any questions on that before we wrap up the last summer school session for July? Not sure we're going to do it back in August. We got a lot going on, but I hope you guys have enjoyed these 4 sessions so far. So any questions before we wrap it up? P2Bs, cool. Copy that. Nope, all good here. Thanks, Chris. Very cool. So with that being said, I want to thank you all for the summer school series. It's been great. We've had 4 of them in case you didn't. The first one was my 6 rules of trading. We talked about, in the next one, we did analytical skills, how you can improve your stop losses in trading, how you can improve your take profits in trading. And then this last one was trading versus investing. I want you all to take a legitimate look at stock investing. Try both. Give it a year's litmus test. Give it a year's litmus test. Just see which one outperforms the other. If you're going to invest, pick 10 companies at a minimum. Pick 10 stocks that you can invest in, and then hold them through the year and see which one outperforms the other. You might be surprised. Maybe slow money will win. Maybe fast money will win. It's really going to depend upon the market and what it presents itself with. But at least you'll have the direct experience and you'll know the emotional and psychological differences. There's different psychological challenges to trading versus investing. They both present their challenges and strengths and weaknesses. You need to do both. Give it a year litmus test. Give it a year. B2B is saying, thank you, Chris. Cheers as well. Cheers to you as well. And Victor saying, thank you. No questions. Awesome. All right, great. I'm going to wrap it up. Normally every Monday at 10:30, we do a options trading session with Get Technical and Benzinga. My man Neil is out. He's finishing up his vacation. So we're probably going to be doing one later in the week. We will let you know. Stay tuned to the YouTube channel and the community aspect. We'll make a post if we're going to do one later this week. Otherwise, we'll be back next Monday at 10:30 on Benzinga for the Get Technical section. We'll be talking about options. I'm not sure if you know, we have a promo going on this July for 20% off our TTM course. I think it's actually any course that we have, even our options or Advanced Trader's Mindset or Ichimoku. So take advantage of that. It'll be there on the website. Other than that, have a great rest of your week. Have a good week trading and investing, whichever you're doing. Be smart. Always control your risk. And that's pretty much it. Subscribe to our channel if you haven't, and sign up for notifications, and check out our website, secondskiesforex.com. Good luck trading. Good luck investing, everybody. And I'll see you guys next time. Take care, everyone.